Hello, students, and welcome back to another episode of our lecture series for our subject capital market. So, for this particular video, let's talk about fixed income securities valuation, or in other words, we call that the bond valuation topic. So, without further ado, let's show our presentation outline right here. So, for the first part, we're going to discuss the different bond terminologies that analysts are using whenever they are measuring or valuing bond prices. And then for the second part, I'm going to show you how bond quotations are actually read or interpreted. For the third part, we are going to compute for the current yield for bond prices. Okay, and then the next would be we are actually going to compute for the intrinsic value of bonds. And the last component would be computing for the yield to maturity of bond prices. I know some of these terminologies that you are already seeing at the presentation outline are somehow unfamiliar with you, but I promise you at the end of this video, all of these things would be very easy for you, and I think you would appreciate the concept of bonds after this video. And I would like to assume that you would be bond experts at the end of this video. So when we say valuation, it's like valuation is like measuring uh, it's measuring the real growth potential of a bond. Kasi value and price is not the same. And so when we say value, it's the growth after the price. And so when we say general valuation, we have three. Okay, so the first one is the book value. So when we say the book value, it is the value of the asset in the firm's balance sheet. Okay, again, this is the value of that asset in the balance sheet. And we also have what we call book value of a firm. So when we say the book value of a firm, we are actually gauging the real value of the firm less its liabilities. How much is the firm's value right now? So pag yun ang tinatanong, we are actually referring to the value coming from the balance sheet, coming from the books. Okay? Yun, hindi mo yun pwedeng madaya because it's being audited by the SEC. So we're talking of value in terms of price as stated in the firm's balance sheet. And when we say market value, we are talking of the price of the asset as it is currently being traded in the market. Okay? Kaya dyan napapasok yung supply and demand. When there is a supply and demand, sometimes nadidiktahan ng behavior ng mga investors yung price ng isang asset. So, when we say prevailing market price, it is the current price at which this particular asset is being traded in the market. And finally, what we are trying to achieve in this particular lecture is that we are going to measure the intrinsic value. So whenever we measure intrinsic value, we always, specifically for bonds, we always compute for the present value. And so for this, given that information for this particular topic, babalik po tayo dun sa concept ng time value of money. If you can still remember how to compute for your present value, we are going to apply for that concept, for that core concept, for us to look into the intrinsic value of a bond so that we know whether a bond is actually selling at a discount or selling at a premium. So later, mas may intindihan pa natin yung dalawang terminologies na yan, no? Discount and premium. Kasi when we purchase bonds, we want to make sure that we are purchasing value, the value of the bond. And so we don't want to buy overvalued assets. Yun ang pinaka reason why we are actually doing this, because we don't want to buy at a higher price. We always want to buy at a lower price. Right? So, yun naman ang reason kung bakit natin to ginagawa in the first place. And so, when we measure the intrinsic value of an asset, specifically in bonds, we can estimate the future cash flows. Okay? And we can also determine the required rate based on the risk of the asset and market conditions. If you remember, okay, when we say bonds, the general concept of bonds is you purchase a debt. Ibig sabihin, ikaw yung nagpapautang sa isang firm. And so, when you decide to engage in bond investment, you will be asking yourself, is it worth, lending this firm or buying this particular bond at this very moment? Will I be getting the value that I would want in exchange of the risk that is attached to this particular asset? Okay, so in my class under portfolio investment management, we calculate for what we call the required rate of return. And so when an investor demands for a required rate of return, it should be equal or even more than the risk that is associated with that particular asset. Well, anyway, to cut that statement short, pag sinabi lang nating intrinsic value, you would want to get the most out of your money. So, when you decide to invest in something, there should always be a reward. So, the question is, will it be worth it? So, intrinsic value measures or it answers the question, will it be worth it? Given the level of risk that is attached to this asset, will it be worth it? That's why ang pinopromote talaga ni Mr. Warren Buffett is value investing. And when we say value investing, you have to compute for the present value of an asset before you actually invest on it. Kasi it answered the question, will it be worth it? So there is no other way but to know that, but through computing for the intrinsic value or the present value of an asset. So we have a quotation here, no? In a perfect market where all investors have the same expectations and risk aversion, the market value would be equal to the intrinsic value. And so, balikan natin itong slide natin kanina, no? When we say the market is perfect, ibig sabihin, investors have the same expectation and risk aversion. Sabi niya, market value will be equal to your intrinsic value. But the question is, pare-parehas ba ang attitude ng mga investors? Do they have the same type of aggressiveness when it comes to investing? So the answer is no. So dito pa lang, alam mo na that the market value will never be the same with the intrinsic value. Because sometimes when an asset is overly hyped, no? Dahil lang overly hype siya, maraming gustong bumili ng asset na to. What happens to the asset is, again, law of supply and demand, tumataas ang price kapag tumataas ang demand. Even though the intrinsic value remains low, but when investors hype a particular asset, na tumataas yung kanyang price. So, the reason why we do valuation is that we want to assure ourselves as future investors that the market value, the prevailing market prices does not overshadow the intrinsic value. We don't want to be carried away with how the market is responding in terms of the prices of particular assets. What we want to see is that yung market price ba, does it fairly shows or does it fairly project, or is it nearly or fairly equal to the intrinsic value? Well, if the answer is yes, ibig sabihin, the market is really efficient, no? Kung ano yung intrinsic value, yun ang nasa market. But most of the time, that is not the case. That's why, as future investors, you would want to have your market price equal to your intrinsic value. Okay? So for our next part is the terminology. Okay? For par value, in the US, bonds are usually sold at $1,000. Ibig sabihin, that's the minimum price. Of course, nag-i-increase pa rin yan, but the basic, no, yung pinaka lowest price that you can avail of a bond is at $1,000 usually. And other term for par value is face value. At some with some other references, they call it the principal value. But in bonds, there are two commonly used term, no? Pag sinabi nating yung face amount ng bond, yung usually kapag ka binigyan ka ng bond certificate, yan yung makikita mong naka-type dun sa yung bond certificate, no? Face value or the par value. Okay? Next is the coupon rate. Again, this is included in your bond certificate. There should always be a coupon interest rate, meaning this is the interest rate that the issuer or the company will give to you or extend to you kapalit ng pagpapautang mo sa kanila. Again, balikan natin yung konsepto natin ng bonds. There is an issuer that asks for your money. In return, you're called a bond investor. And so, ang kapalit nun, you will be receiving interest payments as stated in the bond certificate through the coupon rate, no? Which means you will be paid at that certain amount every year. And then you have the maturity period. So ito, hindi pwedeng mawala because the name fixed income security, meaning you know how much your investment will, kumbaga you know hanggang kailan mo lang panghahawakan tong asset na to. That's why it's called fixed. Okay? So there is a maturity period, and that is very clear to you once you engage in bond investments. Okay? And then for the indenture, these are the legal side of the bond investment. So these are lists of the terms and conditions of the bond. So we call that the indenture. So, balikan lang natin, no, types of bonds. Just so we know, no, we have what we call the debenture, subordinated debentures, mortgage bond, eurobond, convertible bonds, zero coupon bonds, junk bonds. But here in the Philippines, we have of course, treasury bills and treasury bonds, and we have corporate bonds. Yan ang malimit na tinatrade dito at binibili dito sa Pilipinas. But in other financial markets, napakaraming bonds ang kanilang tinatrade. Now, for the bond quotations, I want you to look at this, let me just use my pointer here. So, let's use a pen. Okay. So, kapag ka nakita ninyo sa mga websites, it's actually this is just one corporate bond. So this is the name, no? ATT, pero it means AT&T. So this is a telco firm in the States, no? AT&T is the name of the issuer. Okay, and then 1 of 8. Okay, 1 of 8. When you try to compute 1 over 8, that's gonna give you 1 divided by 8. That would be 0.125. So meaning, this is the coupon rate. Okay, 8.125 is actually the coupon rate. Okay, that's going to be your coupon rate. And then this number right here, 22, it means this bond is going to mature uh, on the year 2022. Okay. Next is the current yield. I know you still have no idea what current yield is, but the current yield is at 7.7. And then for the volume, it means for this particular day, there are 52 of these bonds that were sold for this day. Okay, and then this closing price and then the net change. This means plus or minus po ito, no? It's either nag-increase yung price or nag-decrease yung price for the day. So when you say 1/4, it means 25% po ang price change from yesterday. So nagkaroon ng increase. Okay, again, let me just repeat, no? When you look at websites, or madalas meron tayo sa Yahoo Finance, you just look at bond prices there and you will see the current bond prices that are trading. As of now kasi puro over the counter lang ang bonds na tinitrade dito sa Pilipinas. So we don't have bond quotations that are available online. Unlike the stock market, no, readily available yung mga prices. Okay, again, this is the issuer's name, this is the coupon rate, and this is the maturity date, and this is the current yield. So for now, ito ang pinaka magiging sentro ng usapan natin for this video. Alright, now that we understand how to read bond quotations, let's, before we move to measuring or valuing our current yield and our intrinsic value, let me just show to you, yung pinaka-core, yung pinaka-context ng ating valuation model. So basically, bond valuation is an application of the concept of present value. So kung ano man yung pinaka-foundational or yung pinaka-konsepto ng bond valuation it's just an outcome of the use of the present value model. Okay. Next is the value of the bond is the present value of all the cash flows the investors receives as a result of holding the bond. Remember that a bond has a maturity period. So if the maturity period is 10 years, how much will the investor get out of holding that bond for the entire 10 years versus, selling it at some point before the maturity period? Okay? Selling or buying a particular bond before the maturity period. So, what we're going to measure is actually the cash flows. Remember, pag cash flow, merong inflow, merong outflow. But in the case of a bond, dahil ikaw yung nakaka-receive ng interest payment every year, we call that cash inflows. But we will assume every time we're gonna talk about or discuss about the interest payments, we call that the cash flows. So, automatic na po yun, cash inflows. So, cash flows in terms of the interest payments that you receive every year. So cash flows is the amount that is paid to the because of purchasing the bond, or we call that PV. So the amount paid, that is the present value. The reason why it's called present value is because you're shelling off a money. You are, ibig sabihin, ikaw ay nagbabayad. Ikaw yung magbabayad, di ba? Kapag ikaw yung bumili ng bond, ikaw yung magbabayad ngayon. So that would be negative cash flow sa'yo or cash outflow. Alright? So kapag ka ikaw yung nagbabayad, we call that cash outflow. Pagka ikaw yung nakakatanggap, we call that cash inflow. And so pag ikaw yung nagbabayad, that would be a negative cash flow on your side. Okay, so cash flows or periodic interest payments, on the other hand, we call that PMT. Most of the formulas that you will see on the internet is actually with an acronym of PMT or payment. These are periodic interest payments, but if you are the bondholder, this is actually form of cash inflow. So kung kanina, itong amount that is paid to purchase the bond, that's called the present value because that is the amount that you pay right now, currently at the present time. That is a negative cash flow. Ibig sabihin palabas. Pero pag ikaw na yung nakaka-receive ng interest payment, that is papasok kasi cash inflow. You're being paid. And then, payment of maturity value at the end of the bond's life. You know how a bond works, right? So, at the end of the maturity period, yung pera na pinahiram mo ay ibabalik din sa'yo. Kasama nung mga interest na natanggap mo. And so, when you say payment of the maturity value at the end of the bond's life, that is cash inflow. Kasi ibabalik sa'yo, papasok. Now, for the other terminology, we have the time frame. Ang tawag sa time frame, it's either sa ibang formula, there is N. N signifies the maturity period. For other references, there is period. Ginagamit din nila yung word na period or yung term na period. Terms, no, or maturity period. But every time may makita po kayong N, it also means bonds maturity. And then interest rate for time value is the rate at which future cash flows are being discounted to present. So, ito po sa mga ibang books, there is what we call I. Yung ginagamit na symbol is I. For some, it's K. Ano pa ba? For some, it's R. But they all mean the same. It means the interest rate. Okay, so mamaya pag-uusapan natin yung tatlong rates, no? Meron tayong tinatawag na coupon rate, which is on the face value of the bond. The second one is the current yield. So these are all rates, ano? Current yield, and last is the yield to maturity. So lahat ng to, mga interest rates na may kinalaman sa valuation ng bond. But they will give you different stories to tell, ano? I know, medyo nakakalito mang pakinggan, but later mas maliliwanagan pa tayo. Alright, so since we're going to talk about the concept of present value, we are going to talk about the concept of time value of money. And whenever I discuss the concept of time value of money, I always show my students the concept of timeline. Okay, actually, timeline is just a presentation. No, it shows how much money goes into an investor's timeline. So it's either negative or positive. So when you say it's a negative, you know it's a cash outflow. Okay, when you see a positive number, it means cash inflow. So lumabas na pera, pumasok na pera. So in this case, at year 0, ibig sabihin, at year 0, naglabas ng $100 si investor. And at year 1, nakatanggap siya ng $30. So, this presentation is called a timeline. So, at the end of the maturity period, no, magkano yung pumasok at lumabas sa particular investment or project ng isang investor. Okay, we will be needing that later as we discuss the valuation of bonds. Okay, yan. Speaking of timeline, using the same example that I used kanina, no, si AT&T bond. So let me just read it to you. AT&T has a coupon rate of 8 1/8 or 8.125%, which matures on year 2022 with a current yield of 7.7. So ito ang pag-uusapan natin hanggang mamaya. So investor that purchases bond today, let's just say at year 2017. So the current price of this bond is 1,055.20. So how would you know how much a bond actually costs right now? Meron po tayong formula later. I will show it to you. But usually itong price na to is not given sa mga problems, but I am just simply showing it to you right now, ano? So it's valued at 1,055.20 and will receive 5 annual interest payments. So meaning meron siyang 5 years kasi 5 annual interest payments for 81.25 and a 1,000 payment in 5 years. So if you try to look at the problem, wala siyang sinabi magkano yung face value ng bond. Okay? Wala din siyang sinabi na maturity period. At wala din siyang sinabing coupon rate. Ano? Wala po siyang sinabing coupon rate dito. But you know, based on the quotation, there is a coupon rate here. And it says, although walang maturity period dito, you know, if you purchase it at 2017 and it matures at year 2022, you know it's a 5-year bond. So sometimes you have to be critical in looking at the problem. Hindi man siya outright na nakasabi, no? But if it says it's a 2017 bond which matures at 2022, you know it's a 5-year bond. Okay? Hindi man niya sinabi, but sinabi niya dito annual interest payment. So you know it's already 5 years. So paano kinompute yung 81.25 payments? Well, that would be $1,000 multiplied by 8.125%. Hence, no, na-compute yung $81.25. So again, it's the face value multiplied by the coupon rate. So para makuha mo yung payment mo or annual interest payment. Now for this price right here, no, mamaya i-compute natin yung current yield para may kinalaman itong given na current yield dito sa ating price, current market price. But anyway, looking at the timeline here, so at year 0, you're actually going to shell off a particular amount. Ano? At how much are you going to buy it right here? So sabihin nating hindi ito given, itong 1,055.2, you have to look at how much the value of this bond is currently trading right now based on this current yield information. Kasi wala naman yan sa quotation. Pag tinignan mo yan sa internet, hindi naman ito given. You will actually be solving for this value. So, at year 1, you will be receiving 81.25. 2019, you will be receiving 81.25. So, at the end of 2022, you will still be receiving the 81.25 along with your 1,000 face value or par value amount. So, ito yung pinautang mo. Ibabalik din sa'yo at the end of 5 years. Now, the question is, okay, so now that we are showing actually the formula of current yield, ano, kasi sinasabi ko, hindi outright given itong 1,055.2 na to. You have to actually solve for that if you're planning to buy a bond, no? So the formula for current yield is your annual coupon payment over your current market price of the bond. So therefore, if titignan natin tong formula, if given, no, hindi natin alam itong current market price ng bond, or let's just say we don't know the current yield, you can still actually solve for it. Paano, no? We're gonna use algebra for that matter. We're solving for x, ano? But the thing is, itong annual coupon payment is always present. Okay, let's just say we don't know this 1055.2. So using algebra, let me just open my Excel sheet for you guys. Okay, so right now I'm here using my Excel sheet, no? So given that information kanina, there is a 7.7% yield, okay? Current yield, as you saw dun sa ating bond quotation, is at 7.7%, right? And you know that the annual interest payment using the coupon rate is at 8 point coupon rate. Okay, let's just show it. 8.125%. Okay, So therefore, your payment, your annual payment is equal to 1,000 multiplied by 8.125%. You will get 81.25. Now, using all of this information, if you would want to look at the prevailing market price, okay, you just simply adopt the formula right here, no? Annual coupon payment over your current market price. Okay, again, annual coupon payment divided by your current market price. Right. So, therefore, since meron ka ng payment at meron kang current yield, okay, you're looking for the X. If you're going to use algebra formula here, you have to transfer the X to the other side. So anyway, you will be arriving at 81.25, which is your annual coupon payment divided by your current yield. Okay, para makuha mo yung X na hinahanap mo sa kabilang side, you just transfer this and make it your divisor. Okay, you will arrive at this answer. Okay, 1,055.19. So you know that the current market price is at 1,055.19. So ganun din, if the current yield is not there, wala siya sa quotation, you just simply do the math, equals 81.25 divided by 1,055.19. You'll get gawin lang natin percent. Where is it? Percent. Move natin decimal place natin. You'll get, or you will be yielding the same answer. Okay? So, please make sure pag sa exam nyo po, nakakita kayo ng problem, if this is given at hindi ito given, you could just simply use the formula of current yield for you to get the answer. Anyway, so going back to my slides, pinakita ko lang sa inyo kung paano gamitin itong formula ng current yield na nakita natin dito. Because if you're going to buy bonds in the market, your current market price will not be shown. Ang ipapakita lang is yung current yield. So using the information of current yield, you can already compute for the current market price. Okay? Now, we have a problem here, We're looking for the current yield. This is still in percent form, What happens to the current yield of a 1,000 bond at 8% when the market prices move? Okay? What happens to the current yield? Ano bang ibig sabihin ng current yield? For this particular year, okay, this is the amount of money that you get. This is the amount of value that you get out of investing in a particular bond. Okay, sa madaling salita, pag sinabi nating current yield, we're talking for a particular year. So ito lang, for the year, let's just say for example, for the year 2018. Okay? Kasi napaka-importante ng prevailing market price when we are computing for the current yield. Now, ang difference niya sa yield to maturity is that when you hold the bond for the entire duration of the asset. Okay, so current yield is the value this year, and yield to maturity is the value at the end of 5 years. So what we're trying to see right here is that what happens to your current yield when the market prices goes up and down. So using the formula, okay, so punta muna tayo sa ating Excel. We are seeing that bond valuation is actually computing the present value. Okay? We're computing for the present value. Pakita ko lang dito sa ating saan na ba to? Okay. we are computing for the present value of the bonds. So I know I skipped a few slides, ano, but mamaya babalikan ko rin yan. Just to show to you, no, paano natin ina-apply yung concept ng present value. Yung kabuuan. Kasi we know that bonds are fixed, di ba? Fixed na po siya. Hindi nagbabago yung price na marireceive mo in the next 5 years. So we would want to know how much is this total investment worth today? You are discounting all of these values today. How much is it valued today? And you know that the value that you have right now is different from the value that you will be receiving in the future because of the presence of interest. Ano? So, ang tinatanong kasi dito, compute the intrinsic value of the AT&T bond given that you require an 8% return on your investment. So, as you can see, there are arrows pointing to year 0 because you would want to see the value of the bonds that you will be investing from the future, discounting it today. Okay? Is my investment worth it today? Is it worth it purchasing it at 900 if the intrinsic value is 1,005? But before answering that, let me just show how this was computed, no, using the Excel sheet. So, what we're going to do, una muna, no, manual. Okay? Let's do it manually. Present value concept says you are going to compute or you're going to discount the future cash inflow from today. So if you are going to receive, no, equal sign, because the formula of present value is, let me just write it here, no, is future value divided by 1 plus I raised to n, no? Kung natatandaan nyo pa yung So future value divided by 1 plus I raised to n. Yan po ang ating formula. So we're gonna apply the formula of present value in our problem, ano? So at year 0, you are going to purchase that bond, but we just want to look at the present value, no? Hindi pa natin isasama yung year 0. So that would be equal to 81.25 divided by 1 plus your rate, which is 8%, no? 8%, ilagyan natin ng dollar sign para hindi siya gumalaw. Ano? Okay. So, at year 1, because ito yung ating n period n natin is year 1. So, wala pa tayong exponent dyan as it is year 1. So, you will get 75.23. So, i-round off lang natin sa 2 decimal places. And for year 2, I will just simply drag this, para mag-copy-paste lang yung ating formula. Tapos, i-edit ko na lang, no, raised to 2 because we are at period number 2. And for this, it's going to be raised to 3. Raised to 3 because we are at period number 3. And then for this one, it's raised to 4 because we are at period number 4. And then year 5, this is going to be raised to 5. Okay. So what I'm going to do is just, I'll get the sum of all of these cash flows, and then remember, meron pa tayong at year 5, we're going to receive the 1,000 face value. So on top of all this interest, we are going to receive back our 1,000 investment. So we also have to get the present value of that 1,000. So equal 1,000 divided by 1.08 raised to 5 because you will be receiving that after 5 years. So from there, you know that the present value of 1,000 is 680.5 0.58. So what we're going to do is we just get the sum of these values. And so the answer is 1,004.99. Or pag ni-round off mo yan, no, it's at 1,005. So true enough, kung titignan natin tong PowerPoint, balik ako, it's at 1,005. So ano ibig sabihin nun? The intrinsic value of this entire investment is actually 1,005. Okay? Now, the question is, ito na, now that you know the intrinsic value, if you're going to pay this bond for 1,020, will it be worth it? Isipin nyo mabuti. If you're going to purchase it at 1,020 right now, because that's the market price, that's the prevailing market price, they say, okay, this bond is valued at 1,020 right now. But when you computed it, it's only at 1,005. Will you buy it or not? Of course not. Kasi it's expensive. It's overvalued for the price. That's what I'm talking about kanina. The reason why we want to evaluate these bonds is because we want to know if it's worth it. Does the intrinsic value that will be that is computed, no, is it worth the price right now? So the answer is no. But if you said, okay, this bond is selling at 980, will you buy it or not? Of course, because it's cheaper than the market price, or it's cheaper than the intrinsic value. You go for undervalued stocks, or sorry, you go for undervalued assets. So if it's selling at 980, buy it because you're buying at a discount. Okay, so now going back to my Excel sheet kanina, no, I just want to let you know that if you understand the concept of annuity. Sorry, I kept on saying before that it's annuity, but it's actually pronounced as annuity. No? If you know the concept of annuity, it means that you are going to receive equal, or you're going to be depositing or receiving equal amount of money in a particular period. So in this case, from year 1 to year 5, you are going to receive 81.25 out of purchasing that bond. So, ibig sabihin, hindi mo na kailangan gawin ito on a long cut. You could actually do it using the formula of annuity. Present value of an annuity. Okay, so it's C. C means it's the annual payment, or in this case, it's the interest payment multiplied by 1 minus 1 plus I raised to negative n over I, and then bracket. Okay, so how are we going to do that? If we're going to apply the same concept, gamitin natin yung formula ng annuity, we just simply key in here, no, sa ating Excel. So it's actually, we're gonna get the annuity factor kung saan dyan natin i-multiply yung ating interest payment. So it's just, kapag nakakita kayo ng bracket, no, ibig sabihin dalawang parenthesis yan, because it's actually the formula that we use in Excel, para dun sa mga operations natin. So, you have to be careful din sa pag-i-input ng parentheses kasi magkakamali kayo ng sagot pagka kulang or sobra yung parentheses natin. So, dahil bracket po ito, dalawang parentheses ang gagamitin ko. So, 1 minus 1 plus, in this case, it's 8%. 8%, okay? Raised to negative 5 because it's 5 years. Sasara na natin yan. Okay? Another. Nakita nyo, alam mo kapag tama na yung bracket mo sa Excel, kapag nakita mo na yung bold na black parenthesis, it means the operation is closed. Ibig sabihin, recognized na siya ng Excel as a complete equation. Okay, so dahil meron pa tayong numerator right here, no? Lagay natin dito divided by 8%. Okay, 8%. So this is another operation. What you would want to do is you add another parenthesis right here and then mag-add ako ng parenthesis dito sa dulo. Nakita nyo, nag-black ulit siya. Ibig sabihin, tama na yung equation natin. So I'm just gonna press enter. Yan. So meron tayong annuity factor. So from there, actually, pwede na nating kunin yung present value, okay, nitong 5 cash inflow mo. So, equal sign 81.25 multiplied by your annuity factor. You'll get the same answer. Okay, wait lang. So, you have your total answer right here, and then we're gonna get the present value of the 1,000. Okay, kunin lang natin yung present value ng 1,000. 1,000 divided by 1.08 raised to 2. Okay, pero lagyan lang natin ng parenthesis kasi hindi ma-recognize ni Excel yan kung walang parenthesis. Okay, enter. And then after that, no, kunin lang natin yung sum. Oh. Ayun. So, I paused the video, I was looking for kung saan ako nagkamali, and I've seen, no, this is supposed to be raised to 5. Okay. All right. Raised to 5 because it's, the term is 5 years. So you'll get 680.58. And I got the same answer sa taas, no? 1,044.99. Or we simply round that off. It's gonna be 1,005. So it's the same answer, so meaning, actually, this operation right here is just the same concept of the present value of an annuity. Alright? So, kung titignan natin, yung formula ng bond pricing, let me just use my PowerPoint presentation here, no? Again, it's just the same concept of the present value of an annuity. So, kung titignan natin yung formula, bond price formula, it's actually the same. Ayan, no? It's your interest payment multiplied by 1 minus 1 plus I raised to negative n divided by I. The only difference is, in terms of bond, you have to add the face value or your par value at the end of the maturity period of the bond divided by, again, 1 plus I or R or K raised to n. Okay? Nakuha ba natin? I hope that clears that out. So, therefore, you already know, you already understand bakit konsepto ng present value ang ginagamit when it comes to intrinsic value. Okay, now going back, balikan ko lang itong problem natin now that I have discussed about the concept of present value in valuing bonds. So far, we've talked about the formula of current yield, pero let's see how does it really help investors decide on how interest rate and market price affect the value of bonds. So, using the formula of current yield, i-compute natin itong different market prices given if a bond is a 1,000, given that a bond has a 1,000 face value at 8%. So, wala po itong maturity period, but we are just going to see how market prices, the rise and fall of market prices affect the current yield of a bond. Okay? So, buksan ko lang itong aking Excel sheet. So, let's see. So, right here, i-zoom ko lang. Okay? So, let's see. We have the different market prices, no? Let me just copy 960, 980, 960, 980, 1,000, 110. Okay, we have 960, 980, and then we have 1,000, 1,010, and 1,025. So let's see what happens. And let's observe what happens to the market yield if prices go up and down. Okay? So if the price it is at 1,000, because this is the face value, we know kanina, given that the investors have the same behavior, they have the same risk aggressiveness, the intrinsic value and the par value is the same. And so when the market price and the coupon rate is the same, ibig sabihin the current yield will be the same. So let's see if that is correct. So using the formula of current yield, annual coupon payment, you know, it's 80, it's going to be 80. That's 1,000 multiplied by 80%. That's going to be your annual coupon payment divided by, of course, the current market price. Syempre, you'll get same, 8%. But what happens if it goes down to 980? What happens to your current yield? Equal sign 80 divided by your market price, 980. So what happens to the current yield is it increases. Okay, another one equals 80 divided by 960. Okay, current yield mas lalo pa nag-increase. On the other hand, if the price in the market increases, 1,010, oh, sorry, it's going to be equal sign, that's coupon payment divided by your market price. The current yield goes down. Okay, another one, 80 divided by 1,025. Okay, that's 7.8. Okay, so as the investor, you know what is favorable to you is actually higher yields. Kasi pag sinabi mong mas mataas yung yield, mas mataas yung value ng nare-receive mo in a year. So you do not want for your current yield to go down. So as the market prices go up, no, your current yield goes down. The value of your investment goes down. So kung gagawin natin yan ng graphical presentation, let's insert a scatter chart right here. It's gonna look like this one. Okay? So as your market prices goes up, your current yield goes down. Okay? Kasi nandito yan eh. Nandito yung equilibrium point mo at 8%. So you don't want your investment to have a yield less than your 8%, right? So ang favorable sa'yo is yung bumababang market price. As the market price goes down, your yield actually goes up. So meron siyang reverse relationship. That's what they call it. No, there is a reverse relationship. Now, what does that mean? Again, if the prices of the bonds go lower, it's actually favorable to the investor. But if the prices goes up, no, the current yield of the investment goes down. So the price yield relationship is a fundamental property of bond pricing, is the inverse relationship between bond yield and bond price. So as the prices goes up, the bond yield goes as the prices goes up, the yield goes down. Okay? X and Y po tayo, no? X and Y, ang tawag dito, pag nagbabasa po tayo ng ating graphical presentation. Again, if the prices goes up, the yield goes down. Okay, so yun lang po yung point natin dito, but pinapakita natin, ano? Later on, we will present a more precise example so that you can get that idea more clearly, right? So, there is I know we haven't discussed YTM pa, no? But we would want to discuss this further with another example na po, ano? We have here, ipakita lang natin, no? There is this, para lang maipakita natin itong coupon rate relationship to yield to maturity later. But dito muna tayo sa market tsaka face value ng bond. Okay. So, if you have a 10,000 bond, so here's the problem, ano? We are already starting to compute for the value of bonds, ano? So, if you have a 10,000 bond with a 10-year maturity period, with a coupon rate of 7%, and the market is currently selling it at 9% rate, how much would you pay for this bond? Ito na yung sinasabi ko kanina na the reason why we are evaluating bonds is because we would want to know if we are, the amount that you will be paying right now would be really worth it for that bond. Okay. So, kanina binigay ko yung formula, no? Yung formula ng bond pricing, as I have showed it a while ago. Asan na yun? Okay. Is this one. But using Excel, you don't have to do this anymore. The good thing about the Excel sheet is that it does all of the dirty works for you. So let's see how are we going to apply that, ano? We just have to do a breakdown of the bond details. Okay. So unang-una, the payment. Okay. Ang una nating sagutin is the payment. Payment is the interest that you receive annually. So how do you compute that? It's actually the face value of the bond, 10,000, multiplied by the coupon rate. Okay, so that is the payment. So you'll get 700. Now the next one is the terms. Terms means the number of years. It's the maturity period, or sa ibang example, N ang nakasulat dito. Okay? So that means it's 10 years. Alright? So kapag po sa problem, walang nakasulat kung semi-annually ba yan, quarterly, or monthly. But usually, on a regular basis, no, ang bonds is, kung hindi annually, semi-annually lang po yan. Dalawa lang po yan. So, pag wala sa problem, it's automatically annual payment po yan. Okay? So, the future value is 10,000 because you will be receiving 10,000 at the end of the maturity period. That's why ang future value mo is 10,000. Now, for the interest, no, ang ilalagay natin dito is the prevailing market rate. So, currently, the market is selling it at 9%. Okay, we're gonna put it here, 9%. So now, we're looking for the present value. We would want to know how much is the intrinsic value of the bond right now. How much should I pay for this bond? Okay? So equal sign, we use the formula present value here on Excel. So meron tayong formula na PV. You just press OK. I'm just showing it to you, no? What you're going to do is you're just going to input all of this breakdown of information. So for in this case, now rate is this one, 9%. N per, or N meaning this is going to be the number of periods or terms. Okay, in this case, it's 10 years. Okay, okay. Rate is 9%. And then N, or number of periods, is 10 years. Payment, or the annual interest payment, is 700. And then our future value is 10,000. So that's it. You're just going to key in all of the information that is needed sa ating formula ng present value, and then you press OK. Okay, after that, you will be seeing the answer, which is 8,716.47. Okay, so meaning ang intrinsic value ng bond na to is only at 8,716.47. Okay, now the question is, if someone is selling this to you at 9,000 pesos, will you buy it or not? Bibilin mo ba at 9,000? Of course not. Because it's only valued at 8,716.47. But the thing here is, what I want to explain to you guys is that if your bond is valued at 7%, no? And tumaas yung interest rate, prevailing interest rate to 9%, the value of the bond decreases. Okay, that's why we don't want increasing interest rates if you are a bondholder, because increasing interest rates degrades the value of your bond. Okay, now what if it's the opposite? Let's see ha. What if instead of 9%, this bond will sell at 6.5%? The prevailing market price will only be 6.5% instead of 9. Let's see what's going to happen to the value of the bond. Okay, so the interest payment will remain the same. It's still 700. Okay, and terms is still the same, 10. Okay, future value is still the same. So nagbago lang yung prevailing market rate. Okay, so let's see. Present value, shortcut po nito is just simply key in equal sign and then present value, open parenthesis. Makikita nyo naman yung hinahanap niya, no? Yung pagkakasunod-sunod. So, una mong i-key in is yung rate, 6.5%. And then you have your terms or number of periods, comma. Don't forget the comma. And then payment right here is 700, comma again. And then the future value, and then close parenthesis po tayo. There you go. Enter. As you can see, it's negative. Why is it negative? Because presently you're going to shell off this amount because you are buying, you're paying. So cash outflow po siya, kaya negative yung present value. So as you can see, from 8,716, it's now valued at 10,359. Okay, so it means if you are an investor, you purchase this bond, you know that when the interest rates go down, okay, from 7%, the bond is valued at 7, it has a coupon rate of 7%, and if bumaba yung prevailing market rate to 6.5, the value of your investment increases. Okay? Ayun, no? So, if you only bought this for 9,900, aba, ang value niya na ngayon is 10,359. Diba? Okay, again, there is an inverse relationship when it comes to interest rates and prices. Later on, I will be showing a diagram on how come there is an inverse relationship between the price of the bond and interest rates. Now, there is an inverse relationship. Anyway, having said that, ito kasi, pag tinignan mo, it depends if you are the seller or the buyer. So, syempre, kung ikaw yung bumibili, if you're going to buy this at 9,000 pesos, let's just say 9,500 peso, you are the buyer. Would you buy it? Bibilin mo ba to at 10,000? Bibilin mo ba at 9,500 ang isang bond na may intrinsic value na 10,359? Well, the answer is definitely yes, because you are paying more than your money. You're only paying it for 9,500, but the worth is 10,359. Okay, if you are the buyer. But if you already have this bond, hawak mo na ito, you don't want to have a lower interest rate. Okay? Why? Because it actually, ayaw mo pala nung higher higher interest rates would mean lesser value for your investment. Kasi binili mo siya at 9.5 at ang value niya na lang ngayon is 8,716. You don't want higher interest rates if you are a bondholder. Sabi ko nga kanina, ano? Now, let's move to the next. Eto pala, sorry. Kaya ko pala diniscuss ito. Let me just show this to you, no? Let me just zoom this. Okay. So, yung market price, ano, ang pinag-uusapan natin is the market price. So, if you are buying, no, if the market price is same with the face amount of your bond, it means it's at par. Ibig sabihin, parehas lang, sakto. But, if the market price is less than the face value, okay, ulitin natin. This is the prevailing market price. Okay. Okay. The market price is less than the face value. Right? The face value is 1,000. If the face value, ito yon, coupon rate, face value is less than the market price, you know that you are buying at a discount. Okay, this one is a discounted price because the face value, imagine mo, is 10,000 but it's only selling at 8,716. Then you are buying at a discount. But if the market price is 10,000, 7%, but the face value is more than, the market price is more than the face value, then that's selling at a premium. Mas mahal. Okay? There you go. Oh. So, ito muna yung tignan natin ha. Asa na ba yung aking PowerPoint? Ayan, balikan natin. If the market price is less than the face value, the market price is 8,000, it's less than the face value, yes, then it's selling at a discount. But if the market price is greater than the face value, then it's selling at premium. Again, the reason, I will be going back to the core reason ba't kailangan nating mag-evaluate, ano? It's because you would want to know at which price are you actually buying it, buying the bond. Is it really worth the intrinsic value of the bond? If I buy it at 8,000, pero ang kanyang totoong value is 9,000, you know that you're buying at a discount. But if the actual face, no, if the face value of the bond is 10,000 and the market price is valued at 10,500, you know that you are buying at a premium. Okay? So, mamaya pag-uusapan natin yung yield to maturity. Ang pinapakita ko pa lang sa inyo is actually itong dalawa. Ano? Yung changes in interest rates and how it actually affects the value of a bond. So, you know what a discount means and you know what a premium bond means. Selling at a selling above the face value and selling below the face value. Okay, so balikan natin yan later, but I am just showing to you guys how do you compute for the intrinsic value using the present value formula here on Excel, here using Excel sheets. Now, what if the problem is it's paying semi-annually? Dito na po tayo magkaka-talo-talo, ano? We are just going to adjust everything if it's paying semi-annually. So, in this case, no, yung payment natin, if it's a 10-year, 7% coupon, you know that is going to be 700, right? So, what's gonna happen is, every time babayaran ka ng firm, it's no longer gonna be 700. So, instead, it's gonna be 700 divided by 2. So, every time babayaran ka, it's gonna be 350. So, yung terms din natin, ano, it's gonna be 10 years, so twice in a year, that's going to be equals 10 multiplied by 2. So, yung periods mo is magiging 20. Okay. Kung babalikan natin yung formula ng non-annual compounding periods, no? Kinuha ko lang to dun sa aking lecture sa time value of money. And if you have your business statistics, you would remember this formula. No, yung annual interest rate mo would be divided depending on the compounding periods per year, and then your exponent would be m times the number of years. Okay? So in this case, it's semi-annually, so meaning it's gonna be compounded twice. Okay? So, yung rate mo would be divided by 2, your periods would be divided by 2. Kaya ko siya minultiply dito ng 2. Yung terms is minultiply natin ng 2. So, what's gonna happen to your interest is we are going to divide that to 2. So, ang current prevailing rate natin is 9%. Okay. Bakit hindi sa coupon? Because we've already computed for the coupon rate dito sa payment. This is already fixed. But the interest is the prevailing market rate. So in this case, it's 9%. So that would be 9% divided by 2. Sorry, 9% divided by 2 because it's a semi-annual payment. Yan. So it's 4.5%. Tingnan natin kung sakto. Yes, it's 4.5%. The future value is still 10,000. It would not be changed. Now, for the present value, tignan natin kung meron tayong difference. So, the rate is 4.5%. Comma, don't forget that. Terms is 20. Change na. Payment is 350. Nag-change kasi nga nahati sa dalawa. Future value is unchanged. And then, close parenthesis, enter. So, as you can see, no, magkaiba ang value ng investment kapag semi-annually or depende sa compounding period. So, mas mababa pa pala kapag semi-annually, mas bababa pa yung kanyang value. Alright. Now, if it's at 6.5%, tignan natin what's the difference. Again, we just apply the concept of non-annual compounding formula. So this is going to be 6.5 divided by 2. Right? Payment would be 350 kasi semi-annual. Nag-change lang tayo ng prevailing interest rates. Terms is still 20. That would be 10 multiplied by 2. That's why it's 20. Future value is still 10,000. Alright, now let's compute for the present value. Or, yes, present value. Comma, rate, comma, payment, and then comma, future value. Close parenthesis. Alright, so ito, kanina, no? Kung ito mas bumaba, the same goes din naman, no? Ito mas mataas ang value kapag compounding. Right? So, mas mababa if it's gonna go down, or sorry, if the interest rate goes up, mas malaki ang ibababa ng value ng investment mo if it's compounded semi-annually as compared to annual. And ganun din naman, kung bumaba to 6.5, tapos semi-annually pa, mas malaki yung increase in terms of the value. So, 10,359 versus 10,363.48. So, that's how you compute if it's a non-annual compounding period. I-adjust lang po natin yung ating interest and yung ating payment. Okay, wag pong kalimutan because in your exam, this would be probably one of the problems that you would be computing. Okay, so let me just reiterate. There is the price-yield relationship. When the price goes up, the yield actually goes down. But if the price is down, the yield is actually higher. And again, the coupon rate relationship, to the yield is when the market value is less than the face value, you are selling it at a discount. If the market is equal to the face value, it's selling at par. But if the market price is greater than the face value, then you are selling at a premium. All right, for the next part of the lecture, let's talk about the yield to maturity. Okay, so the difference of current yield is that you are measuring the value of your present inflow. Ibig sabihin po, yung current inflow for the year. Like for example, at year 1, you're measuring the current yield. So sabi ko nga kanina, the difference between current yield and the yield to maturity is that the yield to maturity is measuring the rate if you are going to hold onto the bond investment for its entire duration or the entire maturity period. So they are saying, no, the risk of a bond is higher if the maturity period is longer. So, ang definition natin ng yield to maturity is it's the bond holder's expected rate of return. Okay? So, ibig sabihin, mas matimbang po yung yield to maturity as compared to the current yield. That would be, current yield is actually valuable if you are planning to sell your bond prior to the maturity period. So, ang yield to maturity, mas matimbang ito sa mga investors na talagang may planong hindi ibenta yung investment nila hanggang sa mag-mature yung bond. Okay, so again, so far kanina, we've talked about the coupon rate, we've talked about the current yield. So let's talk about the yield to maturity. So ang formula ng yield to maturity, no, is in other words, I know this is quite complicated because walang masyadong label. Alam naman natin, no, ayaw natin ng walang label. So let's move to another form of formula na merong label. Ayan. So naganap ako ng may label. Kung titignan nyo, iba-iba lang yung terms na ginagamit or yung acronym na ginagamit, but then again, they all mean the same. When you say FP, it means the face value or the par value. So it means the same, market price or MP, same lang. Pero ang sinasabi, the formula for yield to maturity, so it's just an approximation, no? We're still looking, the answer that we will be getting from this is a percent answer. We're looking at the rate at which the bondholders will get in exchange of the risk that they are willing to take, ano? Kaya rate po ang hinahanap nating sagot dito. So, C, or the annual interest payment. So, the coupon payment or the PMT. So, again, iba na naman yung ginamit dito, but again, they mean the same. So, PMT or C, coupon payment, it's all the same. Plus, the difference of the face value minus the market price divided by the number of years to maturity over the sum of the face value of the bond or the par value plus the market price divided by 2. Okay, so that is the formula. Usually, pag nasa classroom, pinapagawa ko pa to talaga at pinapasolve ko manually. So, buti na lang, online class na tayo. We're not gonna use any more of this formula. Siguro, dinidiscuss ko na lang to for the sake of at least you are well aware of the formulas. But we can do a shortcut to this using, again, Excel sheets. So, tignan natin po itong problem natin na ito sa yield to maturity. You're planning to buy a 50,000 bond. So, the face value is 50,000 with a coupon rate of 8.25% maturing in 10 years. Currently, it is being sold at 48,500. So, what is the yield to maturity of this bond? So, malinaw po sa atin, that unahin natin palagi yung payment, para, kasi kanina, sabi ko sa inyo, unahin palagi yung payment. So the payment is equal to 50,000, 1, 2, 3, multiplied by 8.25%. Okay, there you go. So you have an annual inflow of 4,125. Now the terms is 10 years. Okay, and the future value is 50,000. 1, 2, 3. All right. And the interest rate is 8.25%. Now, what we want, hindi pa pala, no? Meron pa pala tayong present value. It's because nakasaad na dito yung ating current price. So, since it's the present value, we have to make it negative, negative 48,500. Yan. So, kumpleto na yung ating requirements for us to get the yield to maturity. We simply use the formula rate. Okay? So, meron tayong formula na rate. Yan ang ating gagamitin para makompute ang ating yield to maturity. So, i-enter lang natin yung mga hinihingi niya. NPER or the periods, number of terms, comma, payment, right there. And then we have the present value, which is negative 48,500, comma, and then we have, we have the future value. Okay. So our yield to maturity is actually 8.7%. So, ang nilagay kong interest dito is the coupon rate. But actually, we won't be needing that, no? We won't be needing the 8.25 coupon right there because we've already used it for the computation of the payment. So, what we want to know is if I purchase this at 8.25%, but the real value that I will be getting if I hold on to this particular investment is more than the 8.25%. No, it's actually, I will be getting actually 8.7%. That's more than the 8.25% coupon rate. Why? Because I only purchased it at 48,500. No? The value that I will be receiving is more than the 48,500. Therefore, my yield to maturity is actually 8.7 and not 8.25%. Now, what happens now if it's actually selling at, kumbaga semi-annual siya, no? Kung kanina, annual, let's see if it's, what happens if it's semi-annual naman. Okay, now the payment would be, of course, no, it's gonna be 4,125 divided by 2. You know that. Kasi twice ka babayaran in 1 year. Now, the terms would be times 2. Of course, that would be equal to 10 multiplied by 2. All right. Now, for the future value, same. You'll get 50,000. The present value is also the same. Negative 48,500. Now, we can compute that, again, using the formula of rate. Enter lang natin yung ating hinahanap. No? Nakasulat naman dyan yung pagkakasunod-sunod. Sundan nyo na lang. So, terms is 20 years. Kasi times 2 ng 10 years. Payment would be 2,062.5 divided by 2, comma. Present value is negative 48,500, comma. And then the future value is 50,000. So here's the thing. So since semi-annual po to, what we're going to do is we're just gonna multiply it to 2. Alright? So, pagka-close mo ng parenthesis, you simply multiply it to 2 para makuha natin yung annual yield to maturity, which is the same, 8.7%. Or 8.71, around that of 8.7%. So, that's how you do it. Baka po kasi may ma-encounter kayo na problems You're gonna solve for the yield to maturity pero semi-annual yung payment. So, ganun lang siya kasimple. Now, here's another problem that we're going to solve, ano? I'm just gonna zoom this a little bit more para mas malaki po yung ating font. Problem number 1. So, an investor is planning to buy a bond which was issued 3 years ago with a face value of 10,000 with a coupon rate of 7% and maturity period of 15 years. But similar bonds are valued at 8.5%. So how much should the investor buy this bond? So ito wala na pong kinalaman sa yield to maturity, ano, but I just would want to show this to you guys because there would be problems na what if you are buying it not at the maturity period. I mean uh, it's prior to the maturity period. Ibig sabihin, it's already issued 3 years ago and it's still ongoing 15 years. So, how much would that be right now? That would be the question. Okay? So, unahin muna natin yung payment palagi. That would be equal to 10,000, 1, 2, 3, multiplied by 7%. That is the coupon rate. Huwag po tayong magpapalito dyan. Okay, so you will be receiving 700. Terms is, this is the thing, ano? The terms is 15 years, but that is already 3 years ago. Okay? Na-issue na po siya 3 years ago and it's currently still ongoing. So that would be 15 years minus 3, that would be 12 years na lang. Okay? So, please be mindful po sa mga problems natin na mai-encounter ninyo, ha? Please keep that in mind. And then for the interest, it's valued at 8.5% at the market right now. Okay? And so, the future value is 10,000. 1, 2, 3. Now, the present value would be what? Ano daw ang intrinsic value ng particular bond na to? How much are you willing to buy it if ever? Ano? So the rate is 8.5%. The terms is 12. Payment is 700 and future value is at 10,000. Close parenthesis. Alright, so it's actually at 8,898.3. So what if it's at semi-annual periods? Again, you just do the same mechanics. It's gonna be this one, 8.5 divided by 2. Right? So percent, gawin nating percent. There you go. Terms is 12 multiplied by 2. Do not forget. Payment would be, again, because twice po siya babayaran, divided by 2. Huwag po tayong palilito dyan because I know it's very tricky but you have to get used to it. You don't have to memorize but you have to understand the operations why we are doing it. Okay, so present value, open parenthesis, rate, comma, terms, comma, your payment, comma, future value. Okay, close parenthesis. Now it's 8,885.19. So ito pinakita ko lang, no, hindi tayo nag-change ng interest dito. I'm just showing that it's a semi-annual payment. So what would be the difference? So as you can see, same lang sila but the compounding actually change the amount, so mas mababa na yung value kapag ka semi-annual. So here's another problem. So what if it's the rate is at 9% and we know how interest rate changes the value of bond. So pakita lang natin, ano. So if this is kanina the coupon rate is 9%. valued at 8.5%. So this time, the coupon rate is higher than the market price. So what's gonna happen? Okay, so unahin muna natin yung payment natin equals 10,123 multiplied by our coupon rate, which is 9%, right? 900. Terms is 15 minus 3, that would be 12. Okay, future value is 10,000. Same, right? Now, the prevailing interest rate is still at 8.5%. Ang nag-change is yung coupon rate. So, what's gonna happen now to the value of our bond? So, equals present value. Rate is at 8.5%. Terms is 12 years. Payment is 900 and future value is at 10,000. Close parenthesis. So it's now valued more. Okay, so as compared to the 7%, again, the price of the bond increases if interest rates actually increases. As compared to ito, nagkaroon siya ng ano, kung nakita nyo, no, the coupon rate is higher than the what? Prevailing market price. Kung titingnan natin, bumaba. From 9%, the value went down. That's why the value of the bond actually went up. Ang opposite naman nito, 7% yung coupon rate, tumaas yung interest rate. So therefore, what happened to the value of the bond? No, nag-shrink. Again, there is an opposite reaction to interest rates and the price of the bond. So again, what happens if it's a semi-annual payment? Pakita ko lang. I know na master nyo na by now, but let me just repeat it for you guys. So this is going to be 8.5 divided by 2. Right? Gawin nating percent. Siyempre, mas naaalala natin pagka paulit-ulit, right? Terms is equal 12 times 2. There you go. Payment would be 900 divided by 2 kasi twice babayad. Future value will remain the same. Right now, we're looking for the present value. PV, we have rate, comma, terms, terms, comma, and then payment, comma, and then future value. So, there, mas malaki, no? Mas malaki yung in-increase sa value because it's compounding. Alright. So, I hope that made sense to you guys. Now that we know the computation, let's make sense of the further discussion. So, now that we know how to compute for the yield to maturity, let me just, show this again to you guys kasi na-compute na natin yung ating YTM. Let me just copy this thing and then let's paste it here. Okay, let's paste it there. Okay, so now that we know what yield to maturity is, let's make sense of this entire explanation. So tingnan natin yung coupon rate. If the coupon rate, okay, we have here, it's 8.25. And the yield to maturity daw, if the coupon rate, eto siya, 8.25, YTM is 8.7, is 8.25 greater or less than 8.7? We know it's greater than. The coupon rate is, so the coupon rate is less than the YTM. Tama? Coupon rate is less than the YTM. Palagi ka dito magsisimula mag-compare ha. The coupon rate is less than the yield to maturity. So you know it is selling at a discount. Why? Kasi 48,500. versus 50,000, dito pa lang alam mo na it's already selling at a discount. So automatic, if the coupon rate is less than the yield to maturity, then the market price is less than the face value. True enough, the market price is less than the face value. Then it is selling at a discount. But if the coupon rate is greater than the YTM, then the market price is greater than the face value, and you know the bond is selling at a premium. And you don't want to sell, and you don't want to buy premium at a premium price. You would always want to buy at a discounted price no matter what happens, diba? So that's how you make sense of this explanation. And sobrang dalang mo lang makakita na yung coupon rate is actually equivalent to your YTM. And you know, if that happens, the market value is equal to the face value, which means you are selling at par or pantay, no? Par, pantay. Okay. So, therefore, ang interest rate risk, I think this time, mas maiintindihan nyo na ano ang ibig sabihin ng interest rate risk. Because bond prices fluctuate over time. That's why the longer that a bond is exposed to time, the higher the risk this bond would actually have. Kasi nga, the fluctuation makes the price or the interest rates of bonds makes a bond risky. But not as risky as stocks, but yun ang component ng bond kung bakit siya at least meron pa ring risk, no? So as interest rates in the economy change, required rates on bonds also change, resulting in investors' intrinsic value changing and market price changing. So that is the effect when interest rates in an economy change. Nagpapalit yung required rate of return at nagpapalit din yung intrinsic value. So therefore, as interest rates go up, the value of the bonds goes down. Ano, nakita natin kanina yun when we computed for the current yield, when we computed for the yield to maturity, we saw that when interest rates go up, the value of the bonds go down. And similarly, when interest rates go down, similarly, when interest rates go down, the value of the bonds increases. Okay? And so that ends our discussion for this particular topic. I hope it made sense to you that if you are a bond investor, napaka-crucial sa'yo ng interest rate changes. That's why hand in hand, the government and private businesses. And that's why private businesses are really concerned on how the government is managing our interest rates. Again, there is an inverse relationship. Let's just pakita lang natin. There is an inverse relationship when it comes to price and interest rates. So I hope marami tayong na-realize for this particular topic. It made sense finally how interest rates actually affects and impacts the value of investments, particularly bonds. So maraming salamat for finishing this video. I hope you've learned a lot regarding interest rates and regarding bond valuation.